This is FinTech Insider News. This week, Monzo migrates its investment funds to Seccl. What's going on with the UK's new Buy Now, Pay Later affordability checks? And what are Pipe's new AI agents? We'll be discussing all of these and more on today's news show.
Does it ever feel like you're a marketing professional just speaking into the void? Well, with LinkedIn ads, you can know you're reaching the right decision makers. You can even target buyers by job title, industry, company, seniority, skills. Wait, did I say job title yet? Get started today and see how you can avoid the void and reach the right buyers with LinkedIn ads. We'll even give you a $100 credit on your next campaign. Get started at linkedin.com/results. Terms and conditions apply.
Hey, it's Paris. You know I love sparkly things, right? Like stars. Duh. And thanks to Hilton and AutoCamp, I just slept under them. Picture me, serving looks by the fire outside my luxurious Airstream, making s'mores with the kids, while a national park is our backdrop. The great outdoors meets Hilton hospitality. That's hot. Explore all the new ways to stay at Hilton.com. Hilton for the stay.
Hello and welcome to episode 983 of FinTech Insider. I'm Benjamin Ensor, Director of Research and Strategy at 11FS. So, this week, England's Lionesses continue their charge through the European Football Championships in defence of their title. And by the time this episode airs, we will know whether they can defeat Spain. But back in the world of financial services, the other big question is, what's topping the agenda in FinTech news this week? I've got the answers, and I'm joined by three brilliant people who have answers of their own. They're champions of FinTech, so let's meet today's panelists. First of all, we have a FinTech Insider debut for Chlorel Rekopovic, Chief Product Officer at Pipe. Welcome to the show, Chlorel. We'll be hearing a little bit more about the exciting news a little bit longer, but can you tell us a little bit about your role at Pipe, please?
Certainly. Good to hear and be here with everyone. I am the Chief Product Officer at Pipe and have really been focused on one main thing, which is bringing capital and the solutions for small businesses to where they are, which is really gravitated to platforms today, and doing that in a way that is very friendly for them.
Fantastic. Well, welcome. I'm also delighted to welcome James Holmes, Chief Commercial Officer at Seccl. It's great to have you on, James. Can you tell our listeners a little bit about Seccl and a little bit about your role, please?
Thanks, Benjamin. It's great to be here. Seccl's mission is to help more people invest. We provide custody and trading infrastructure that enables business to build investment platforms. We do this typically via an API, allowing firms to customize their own journeys and embed them within their existing propositions. Think about customers who want to open an ISA or a pension and invest in funds, equities, or ETFs. I'm the Chief Commercial Officer, so look after both the commercial and product functions.
Well, welcome. And I'm also delighted that we have a FinTech Insider debut for Neil Kedakatur, Chief Executive and Founder of Credit Spring. Welcome to the show, Neil. Can you tell us a little bit about Credit Spring, please?
Yes, hello. Thanks for having me. So Credit Spring we're creating a new category in lending, which we're calling subscription finance. Subscription finance is a safer, simpler, more affordable way for people to get access to short-term liquidity. Our real USP is we don't charge any interest. We just charge a fixed fee, which makes it a whole lot safer and simpler.
Fantastic. Well, welcome. So now we have a panel, so let's get onto the news. So our first story comes from here in the UK, which is that Monzo is migrating its investment accounts to Seccl. Monzo has moved its investment and pension account custody and administration to Seccl, which is a UK-based provider. BlackRock will continue to manage the funds available to Monzo Investments and Pensions customers. But all the underlying investment assets and pension wrappers held within Monzo, such as stocks and shares, ISAs and general investment accounts, will now be securely held by Seccl. This transition covers custodial services, record-keeping, and ISA management functions, responsibilities that were previously shared or overseen by other providers such as FNZ. The move aims to streamline the back-end operations behind Monzo's investment offerings, potentially improving service robustness and operational efficiency. James, obviously I'm very keen to come to you first on this. Can you tell us a little bit about how this came about and why is it exciting for Seccl?
Yeah, great question. We'd actually been speaking to Monzo on and off for a while, and they were looking to extend their investment proposition into new areas. Particularly, they were really keen to launch fractional ETFs. So previously, their proposition had been centered around 3 funds, and they wanted to expand their investment offering. They also wanted to ensure that their customers could contribute to the SIPs that they'd opened. And so we picked up the conversation again, and things moved quite quickly. They selected us as the provider of choice in January. We had our kind of first proof of concept up and running in April, and we were powering all new investment customers from the end of June. And in September, we'll be migrating just over 300,000 of their existing customers over to our technology and custody.
Fantastic. It's hard to talk about this without using acronyms like ETFs or exchange-traded funds and SIPs, which are self-invested personal pensions for our non-UK listeners, and indeed possibly actually some of our UK listeners. How is this going to look different from Monzo's customers? Are they going to see any differences, right? Because BlackRock's managing these funds. BlackRock continues to manage the funds. So as a Monzo customer, do I actually see any difference? I mean, what's the big deal here for customers?
Yeah, I think the aim, to be honest, is for Monzo customers not to notice too much of a difference. Our role is to provide the infrastructure to enable Monzo to build the journey that they want. And in the background, there's obviously lots of people ensuring that the technology is up to scratch and enabling them to do that. From a Monzo's customer perspective, the proposition should look and feel the same, albeit with some nice new shiny features that allow them to get more out of their investing.
Fantastic. Neil and Chlorel, I'd love to bring you in on this. We've seen a trend in the UK and some other markets of digital banks starting to expand to offer investments and so on. Obviously, in the States, decades ago, you had the Glass-Steagall Act keeping banking and investments very separate. Are you starting to see customers in other countries starting to open investments accounts through digital banks? Do you think that's a trend we're going to see more widely in the world?
I would expect so. I mean, I think particularly for a lot of the newer banks, they've grown very quickly. They have big customer numbers. So now it's how can we sort of offer them more services and also, monetize those customers as well. So I think it makes sense, and I'd probably think we'd see it from other banks as well. But it's interesting that you bring up the Glass-Steagall Act, and what is it? Are we sort of entering that act came in for a reason? So we've all forgotten about that, and is this going to end up something like that? That's sort of my first thoughts.
It is quite interesting because it does seem like we're in another phase of evolution in that sense. I was living in Singapore for some time, the last 3 years, and there's a much more forward-thinking view on the consumer side to be searching for opportunity for everything from a few $100s they're trying to generate some return on to, investing their net assets altogether. And I've seen the adoption flip from I need to trust the person and see the person in front of me to please give me all the options, even if they exist in bonds in some other country, which is an appetite and a digital, let's say, potentially generational thing that is shifting in terms of the behavior and the appetite to start getting digital on your investing. Frankly, it's also been hard to manage the volatility of all of what we faced from an investor life perspective. So I think there's a massive opportunity here for whether it be banks or alternative providers being able to draw that in with banks and partner on that and give people a real picture of their financial life from an investing perspective.
That's a really, really interesting point. James, is your partnership with Monzo going to help Monzo do some of those things, sort of offer for more options and so on?
Yeah, absolutely. And I think it's also about helping people invest for the first time. Lots of Monzo customers might not have previously invested, and I guess the UK has a bit of a chronic problem with over-saving and under-investing. The majority of people who have £20,000 in savings don't invest, and that's something that I think we should strive to change. And I think by firms like Monzo, who can bring super customer-friendly educational propositions to market embedded in products that they already know and trust and love, it really helps break down those barriers to getting people investing.
That embedded point is really interesting, isn't it? I mean, sort of building on the point, Clarel, you were making about people no longer sort of need to see the whites of the eyes of the sort of person they're investing with. Do we think investing is gradually becoming something that just gets embedded into banking? Does to your point, Neil, do we do we go back to a world where actually banks dominate investing, as they do in much of the world already? Not really sure who I'm throwing that question to.
Well, I was thinking, the name of the podcast is Fintech Insider, right? And I think a lot of the whole fintech ecosystem is around sort of maybe some more cynical than others, but democratizing access to finance and to investments and stuff. And everybody now knows that they should be investing or want to invest, and it's no longer sort of just for a certain type of person. So I think this is just another sort of sign that we're heading in that direction. Everyone should. A lot of our customers at Credit Spring, we cater to lots of people without much savings, but they want to invest too. So we're even looking at, are there ways that we could help them invest and stuff like that. So I think it's all about, giving more access, and everyone, and Pipe as well. Everyone is about sort of opening up new ways to get access to finance, et cetera. So it seems like this is part of the trend.
James, we don't often talk about custody on this podcast, perhaps unfairly, and it's sort of custody and sort of record keeping and so on sort of sits in the background, but it's also crucial. To what extent are companies like Seccl trying to make things like custody sort of cheaper, faster, better, and sort of how does that manifest? Can you tell us a little bit about what you're doing that is sort of better than what's been done before?
Yeah, 100%. I think it's really interesting, and you're right. I'm not sure it's unfair that custody doesn't get talked about on this podcast, sort of being frank. It's not necessarily the most glamorous part of the industry, but it is really critical. And I think the things that have changed in the last 10, 15 years is the barriers to entry to launch an investment platform have drastically changed. If you're 15 years ago, in order to launch an investment platform, you'd have probably needed like a bespoke piece of software. Someone would have customized it for you. The barriers to entry in terms of startup costs would have been a 7-figure number and just to set it up. And our view is it should be much more like a SaaS product. So, we want to be like Stripe to payments or Shopify to e-commerce. Like, how do we provide infrastructure as a commodity that's delivered on a SaaS style app that's super easy to stand up? It doesn't require lots of bespoking. It doesn't require customization. And really, people should be able to get off the ground with a much smaller war chest in order to launch an investment product. And we think that will help drive innovation, right? We're not trying to provide the services that are going to make you stand out. We think that our firms are best placed to do that with their UX, with their customer engagement, by embedding it next to products that their customers already love. What we want to do is provide really rock solid, reliable investment infrastructure that enable you to build any journey that you want, and distribute that to your customers.
Clarel, I loved your point about, you're talking about Singapore and, the different experiences of consumers in different markets around the world. Do you think that sort of embedding investing options into banking apps is going to help younger customers make that switch from sort of saving into investing? Because in the UK we certainly have a challenge with that, and I think we see that challenge in many other markets that people are comfortable putting savings into cash, but that some people, while some people are very happy putting money in Bitcoin, there are many others who are nervous about putting money into stocks or other types of asset. Do you think embedding it into banking apps helps?
This is such an interesting one for me, because I think the thing we all know, all being veterans in some ways in fintech, is that the moat is the trust. And so what do you gravitate to with your money, which happens to be the hard-earned thing that you've created, or the thing that you possibly have frivolously managed? When I think of my bank, there is a good level of trust about why I would gravitate towards them if they were offering me something better and different than what I saw elsewhere. But the challenger point is, who else is generating that kind of trust that's not a bank? And, if I look at what has happened with the generation I see from Singapore, my personal experiences, and I'm not researched in this in particular, but it is interesting to me that there are ways in which younger generation are getting into crypto and into other things, potentially out of FOMO and other perverse incentives, perhaps. But the appetite is there to draw on something else, and either for the fact that they are motivated to move faster and get the growth in their own income in whatever way, but also there are people who are really trying to get a safe place to go. And so I think there's a real opportunity there, whether it is within the bank or other platforms providing that connection to that trust. I can tell you today that GPT might be a way that I manage my own finances in the future, or Gemini, or any other interface there. If it tells me things that helps me create a journey of my financial life with my 2 kids, I could very well see it popping up in there. So slightly forward-thinking view, but it is much about trust, is my point.
I think that's a really great point. Well, James, congratulations to you and your team. I'm sure there was a lot of work that's gone into underneath this. Are we going to be hearing lots of more great things from Seccl over the next 6 months? I'm sure you can't tell us about the deals that are in the pipeline, but is this the start of many great things to come?
Yeah, thanks very much. Has been a lot of hard work over the last 6 months across both businesses to get us into this position. And yeah, very much hope so that there's going to be a number of exciting announcements over the next 6 months.
Oh, fantastic. Okay, well, let's move on to our next story, which is that Pipe has unveiled some new AI agents to supercharge growth. So Pipe, which offers revenue-based financing to small businesses, has introduced 4 AI agents to automate operational tasks and drive growth without increasing headcount. The AI agents tackle challenges in areas like fraud and compliance, payment recoveries, customer engagement, and finance operations. And Pipe's new agent-based architecture is a shift from a sort of resource-constrained model to a software-driven platform, enabling easier scaling. Clorel, it's really great to have you on the show to talk about this new launch in more detail, and particularly as you've just been talking about, AI in investing. You're clearly putting your sort of money where your mouth is. So can you tell us a little bit more about the launch and what led Pipe to this?
Certainly. It has been, just as a context set for a second, what we started doing was really looking at our internal workflows. And with every wave of technology, you really have to go back to first principles and ask, what is this, as opposed to try and stick it on the side, for lack of a better phrase. And so what prompted this is just recognizing that we have 2 opportunities with becoming more AI native as a company. One is to rethink the efficiency we're up to, which you described. But 2 is to figure out what extra value does that add to the customers we serve. And Pipe serves 2 customers. We serve the platforms that we are, if you think of the very large platforms in the world, like a Booking.com or a equivalent, they are all looking for ways to make sure that the small businesses that are operating on there get the financing they need. And truly, it is still a gap today. There are over 200 million businesses in the world that still do not have access to capital, small businesses. Capital is the first wedge, and so we have been figuring out ways to serve that better. But as a company that has been growing very, very fast, I could argue 4 to 5 times every 6 or 7 months, we have been asking ourselves, what are we doing here to actually step change our scalability? So we came to a couple of use cases, and we're actually burning through them pretty rapidly. And those use cases have developed. I'll give you two stories that triggered these for us. So one is we have compliance that happens, as all of our fintech family does. And these compliance reviewers are juggling 6 screens on a flagged application for a capital product, for example. How are they chasing the email, the doc that they need to check? And this doesn't happen all the time, by the way. This is 2% of the time of any application, because most of them do pass through. But that's 40 minutes of a person's time. And the person then needs to pull in all types of information for that. Yes, we have different types of software, but what the AI agent is now doing is it's pulling in every data source, every identifiable risk that we see, orchestrating that from a number of sources, including other software providers that are third party, but things that we are doing as first party software development ourselves, and turning that into a a true decision that a human either will approve or it will push through with good evidence for us to be able to rely on. And we sanity check and go. And now we've got a 1-minute process, which is a dramatic improvement from where we were before. We're able to scale that across geographies. We have ways that those models can tune themselves to policies in different regions. So that's just an illustration of what started that. And frankly, we had to get our board. It also triggered from the fact that our board gave us the green light to go ahead and even push into agents, because there's a really interesting way to govern them today, which is not by committee. It's literally by the code itself. So I don't want to get into the technicalities of that, but it's a meaningful thing to say that we are in a very different time today. There was a time 11 years ago when I started in Amazon lending, building that business and doing machine learning, which is a version of AI, where you literally had to look on the outside and try and figure out what was going on inside the black box. We have many more ways to do that today with the tools themselves.
I think this is so interesting. Neil, I'd love to bring you in here because one of the things we've seen in the past sort of month or two is that, a couple of the sort of fintech, very successful fintechs like sort of Monzo and Wise and so on, getting into trouble for anti-money laundering issues, which, to be fair, many large established banks have also been in trouble for at various points in the past, right? So I'm not picking on them. But part of the challenge they seem to have struggled with is scaling fast, just getting their processes to keep up. So I'm very interested in what Clarel and Pipe have been doing of trying to use AI to sort of manage that. What's your view on that? Do you think, more fintech businesses should be using AI to try and help them scale fast?
Yeah, definitely. I think it's a combo. I don't know, obviously, but we use automated decisioning, machine learning, AI for agents and all that stuff. But it's a combo of the reason they're able to scale so fast is a lot of automated decisioning. But then I think a lot of things fall through the cracks when you're automated decision. We've had those issues too. So that's why you had this, like Monzo has, customers at 10 Downing Street in Buckingham Palace or whatever, because sometimes the machine can't catch that stuff. So you need a combo of humans and AI. But at Credit Spring, for example, we process millions of applications a month all automatically, and that's essentially one sort of machine learning use case. But then we'll have humans sort of spot check that, but we'll also have then AI spot check what the humans are doing. So it's a combination of both, really, I think. I expect, as companies grow really fast, mistakes do happen. Monzo, I don't know how many millions of customers they have, but that recent fine was only a few thousand people. But it's a big risk, and it's sort of a responsibility when you're a regulated company that while it's a lot of numbers and big risk, you still have to make sure you catch it.
James, there's a lot of repetitive processes in custody and security services and so on. Are you starting to make use of AI at Seccl? Are you seeing opportunities to bring that into some of your processes?
Yes, particularly where we're experiencing or interfacing with third parties that maybe aren't as digitally native as we want. Believe it or not, still paper involved, especially, I don't know if anyone's tried to transfer a pension recently in the UK, but that process is, a lot of nodding on the panel, incredibly painful, mainly because providers refuse to use the electronic systems. So we fundamentally still have to deal with post and paper, and actually trying to consume that information back into our system to enable automation has been a really good use case that we've been exploring. Same with fund manager statements and things like that. Trying to take unstructured data that isn't consistent and kind of reflecting it back in our system is something that we're actively exploring about how we can tackle that.
Thank you. Clarel, tell us more about how you're using these agents at Pipe, because from what you were saying, it sounds like a lot of this is for sort of internal tasks, and it's just helping you as an organization become more efficient and more effective. But is that also actually starting to help your customers? I mean, are they sort of interacting and engaging with the agents directly as well?
Excellent question. And so the first order benefit is that they benefit because they get answers from us faster, as an example. They get cash funded more than they would have otherwise because our treasury agent is pushing surplus cash into parts of our business where we need them. But direct interaction is coming through, for example, our revenue agent, in which that interaction, I don't know if you've ever experienced trying to talk to it. So these are not chatbots. Let me just say that. I'm sure you've all tried to resolve a return somewhere on some website and had to give up on the second try. These are not chatbots. What they are they're really, really tuned around things that we have very rich data on by now in terms of interactions with the customer, and can solve a good majority of our smaller queries, for lack of a better phrase, from those customers, and put our humans on more complex challenges, like the small business is now evaluating an extension of its property. Let me help you evaluate that need for capital with a conversation with a human. We're going to evolve with that as well. So that interaction is happening. The future interaction I see is that we're actually now able to, so as an example, one of our platforms that we service and have a really good record with is Boulevard. They are nail salons and spas, et cetera. There's going to be a future in which Pipe's going to be able to create an agent. We have a prototype for this, which is fill all my appointments with bookings that are higher value than I had last Thursday. And imagine being able to use that agent to source your business and connect to your operations. So the true customer is obviously the small business, but it is truly how we're helping the platform like a Boulevard make those connections in the near future. It is not even 3-5 years away.
It's really, really interesting. And you were also, earlier, you were talking about the sort of transparency. You were saying, when you first started looking at sort of automation and so on, you were sometimes struggling to understand how systems had made some of those decisions. How are you managing that now? Because presumably, there are some decisions, credit decisions or whatever, where it is important to be able to explain a decision and understand how that decision is made. How much sort of transparency are you managing to get from your agents? Can you understand why, when they're making autonomous decisions, can you understand that?
Yeah, so I think the way to think about this is that two things. One, take that reviewer, that compliance reviewer. They are seeing, what happens is everything of what the model is doing, it deconstructs and explains itself. So at each stage of the process, it tells you which data it's using, why it's using it, where it found a problem, why that problem was there. And so you can backtrack and audit trail all of that. And the conclusion itself can be checked at any time, but so is the process. Now, this is important because in the past, what I was not able to do was to see the process of how you think. If I was trying to get into your brain, I couldn't quite easily figure out your process without really interrogating you. Whereas we've reached a point, and I don't mean to be technical, but if you know something about MCP, which is a protocol that really helps these agents to actually access information about each other and to talk to different sources of information around your business, let's just say, or your systems and data, that particular protocol can actually go and interrogate the decision itself and ask, what is the decision process? So it can look at its own process and break it down for you, and then you get exposed to what's inside the black box. So I am dramatically simplifying, but my point I'm making is that the technology has gotten to a point, if you just take MCP, where you can look at not only the decisions it's making, like the outcomes of that compliance or fraud review, you can look at the decision process, and then I can make a very, very good decision about whether it's meeting my policy or not. Does that make sense?
It does make sense. And it's super interesting. Neil, I'd be interested in your view, because there's always been a question about sort of ethics with AI, but also questions around sort of lending and credit, and groups not wanting to be discriminated against for reasons they can't see and so on. How important do you think this sort of explainability is in enabling AI to play a bigger role in financial services?
I think it's massively important. There's a history of discriminatory practices in lending. And, if you talk about black box, if you're just saying yes or no and you don't understand why, oftentimes it can lead to bad outcomes. So we're very, very careful of, first of all, we don't want any sort of characteristics that could lead to a discrimination. But even still, there's some lenders will use, say, postcode data, which can actually be discriminatory by itself, right? So we won't do that. So you have to be able to stand by a decision. The good thing about being regulated is you still need to be able to I always say, you still need to be able to look the regulator in the eye and say why you lent to that person or why you didn't. And it's not good enough, going back to what I said earlier, having a responsibility to just say, oh, well, the robot said no, so that's what it is. So it's extremely important, as Clara was saying, to not only understand the decision, but how come why was that decision made? And actually, I can show you why it's made.
Have you had any challenges with your sort of culture and your employees, Clarel? I mean, because bringing in AI agents is great. How have your employees responded to it? Have there been any sort of difficult or challenging sort of aspects to that? I mean, sure, there are some people who've welcomed it, but others who've maybe been a little bit more uncomfortable or taken more time to adjust.
It's such a good question because I don't know if any of you have read the book Range by David Epstein. It's an older book, several years old. But what I'm experiencing right now are many concepts of that, which is I can't say that there's been resistance at all. Everyone is kind of feeling a FOMO inside our company about being able to have generated a prototype a certain way, generate an agent themselves. But there is a learning curve there, and you need to know the tools. You have to learn how to prompt. You have to figure out what is hallucination. And what we've done is created a tiger team that is sitting and doing hack weeks with each of our functions. And so I've hired in that tiger team, SWAT team, and that SWAT team is now jumping in with each team. And that's how, for example, we developed the treasury agent quite quickly. And now they're getting more self-service in being able to do that. But the reason I mentioned the Range book is because a concept that's so fascinating to me is that with the type of things we have with AI today, if you get these things right, you can become a very powerful team of one that used to be a team of 6. And so I can put my head of my principal product manager of AI and experimentation next to a finance person, and because that he is not just technical, he actually has a finance background as well. He is able to sit next to that finance person and almost do the workflows intuitively as that finance person did. So he needs to know both finance and AI, and that requires someone who has range in their experience, which is very different from someone who has had, let's say, a single domain depth and stuck in that place. And it's requiring a different kind of capability. And I even think about this for my own kids. How much am I going to expose them to different fields and domains so that they can cross-think and be able to assess and critically think? Because a machine is going to be drawing that in and they need that judgment, but they can't be doing it in a very siloed view of the world. It's a very, I guess, potentially philosophical comment, but it does relate to the combination of the person that needs to sit aside the machine.
It does. It's almost impossible to talk about AI without thinking about the implications for all of us as individuals and the implications for sort of jobs, not in the future, jobs now. Okay, well, on that note, we'll take a very quick pause and we will be back very shortly.
Are your business expenses playing hide and seek? With Uber for Business, the small spends that slip through the cracks, like rides and meals, go right where you need them. Because it integrates with leading expense platforms, you can say goodbye to surprise costs, missing dollars, or chasing receipts. Everything's track downable. Uber for Business. Make small steps that make a big impact. Learn more at uber.com/small steps.
In today's fast-changing digital world, proving your company is trustworthy isn't just important for growth, it's essential. And that's why Vanta is here. Vanta helps companies of all sizes get compliant fast and stay that way with industry-leading AI, automation, and continuous monitoring. So whether you're a startup tackling your first SOC 2 or ISO 27001 or an enterprise manager vendor risk, Vanta's trust management platform makes it quicker, easier, and more scalable. Vanta also helps you complete security questionnaires up to 5 times faster so you can win bigger deals sooner. The results? According to a recent IDC study, Vanta customers slash over $500,000 a year in costs and are 3 times more productive. Establishing trust isn't optional. Vanta makes it automatic. Visit vanta.com/insider to sign up for a free demo today. That's vanta.com/insider.
Welcome back. Before we get back into the news, we want to share our latest Insights episode with you. We're zooming in on one of the hottest trends in financial services, personalization. We're not just talking about your bank app greeting you by name. What really makes an experience feel personal? Is it smarter product suggestions or a full-on redesign of how value is delivered to you? In this episode, David Barton-Grimley breaks down how banks and fintechs are using personalization to win hearts and win market share. From AI and chatbots to data-driven insights, he explores how emerging tech is turning static financial tools into dynamic digital companions. The episode is out now. Just head to the podcast below this one. Okay, back to the news. So our next story is new buy now, pay later affordability checks may cover even the smallest loans. This was reported by The Guardian, among other sources. The UK's Financial Conduct Authority is putting forward new regulations to bring the £13 billion buy now, pay later market under its supervision. From the 15th of July 2026, BNPL providers will conduct affordability checks on all purchases, even small loans of under £50, to prevent unaffordable borrowing and loan stacking. The Financial Conduct Authority estimates that 11 million British adults used BNPL in the year to May 2024. More than 1.1 million owed more than £500, and 5 million had debts of at least £50. Buy now, pay later providers must apply for FCA authorization within 6 months of regulation day, and the consultation on these proposals remains open until the 26th of September. So, Neil, I think it makes sense to come to you first on this, because you've welcomed these new checks. Why are you enthusiastic about this?
Well, I'm extremely enthusiastic about it as a regulated lender, because I think it's important when you're lending someone money, it's important for you to both know that they're the type of person who will pay you back and that they can pay you back. So if you look back to the payday lending fiasco of the early mid-teens, these folks were sort of targeting people who were creditworthy but couldn't afford the loans. And what happened was they gave you a little loan that turned into a bigger loan and a bigger loan and a bigger loan, and then it was unsustainable and it ended in a very bad outcome. So we see a lot of parallels with buy now, pay later to payday loans. They're way, way better than payday loans. I'm not saying they are, but without this affordability check, you give the first person their £50 for free, then you give them a little more, a little more, a little more, and then it gets out of control. And just like some of the stats you said, and people, because it's not regulated, because it sort of doesn't have the same disclosures, it doesn't necessarily look like a loan. So people are taking these things out thinking it's just an easier way to go shopping and buy stuff. And if you don't have an affordability rule, it's very, very easy to end up in bad debt.
James, what's your view on buy now, pay later? It's one of those sort of Marmite products where some people love it, some people hate it. Do you see it as a legitimate budgeting tool or encouragement for impulsive spending?
I think, like Neil said, it's all about how you implement it, and I think the changes that they've released feel like we're on the right track to getting it under a bit of control. I think using the right way, it can certainly be a super helpful budgeting tool, and I think it's important not to pass too heavy judgment on these types of things. But equally, I can totally understand how there's instances where it's not being used in the right way or is causing customer detriment, which I think as an industry we should all be trying to avoid.
Neil, how do you think these checks can be done in a sort of maybe slightly more lightweight way? Because obviously people sometimes don't want a full credit check to be run. People don't necessarily understand how credit checks work. People have this sense that a credit check can affect your credit score. So there's all that, that kind of sort of nervousness about it. How do you think this can be managed?
Well, that's part of an education piece. So now for pretty much any loan that anyone applies for, it won't show up on your credit file. The lenders will do what they call a soft search. All these checks are instantaneous, so I don't really see it affecting the journey. If someone needs to apply for buy now, pay later, and there needs to be some level of KYC or connecting the bank account, you can do an affordability check just the same. You just say how much income you make and then, what your expenses are, and then you sort of put it through, you would call a bureau or use open banking. So it's pretty seamless. I don't think even the customers will really see a difference. What it will do, though, is it's going to affect the the lenders, right? Or the buy now, pay later providers, because they're going to have to say no to a whole bunch of people who previously they would have said yes to. And as James said, and as you said, it's like Marmite, but I think buy now, pay later is good, but it can also be bad, right? You have the BNPL providers going to the merchant saying, if you put us on your platform, we'll make sure that people spend 20 to 30% more than they would have otherwise. Now imagine if a lender said, I'm going to get this guy to take out 20 to 30% more debt than he otherwise would. That's obviously not a good thing. But so affordability sort of helps stop that to a certain extent. It's definitely a good thing.
Clarel, I have no idea how old your children are. They're looking at you, probably quite young. Would you be keen on your children using buy now, pay later as they turn into young adults?
If someone gave them a health of their finances score at the same time. And why I say that is that we often talk about these things, and very rightly, the way James phrased it, we judge it. It does help in certain circumstances, and we have to be safe about it. But no one gives you the measure of that. And so, this is a strange thing to say, but even I just recalled that Goldman Sachs, for a while in their consumer bank, they started to do a survey of their customers to actually get their financial health. How well did they handle financial shocks? And that became a standard thing that they could look at to see how that improved over time. So I know they're 2 and 3, my kids. They're not going to be looking at this. But let's say when they're 18, there probably could be a world in which it's quite obvious to them, not just their credit score, but what is their truly rounded health of their finances, including investing or whatever else that's going on with them. We don't live in a far world away from that, and I'm sorry for being so in the future, but that is what I would do. If you want to do it, measure it, is the point.
No, I'm a huge fan of financial health scores, and I wish there was more use of them. I mean, obviously it's got to be somewhat holistic to be useful, but I think you're spot on. Those are very helpful.
Can I just say that I love to hear that, because at Credit Spring, we do offer everyone what we call a financial stability score, and we give different types of scores because it's important for people to know where they stand, right? Because we talk about these things being totally binary, and for some people, buy now, pay later is the best way to manage their finances, 0% interest, you're very responsible. For others, it's just a slippery slope into debt. But I think you're right. Having that sort of dashboard is absolutely important. And then, financial education is the other piece. How can we improve financial education? Because, in the UK, the financial education literacy age is only age 11. And everyone's embarrassed about that, but they're still buying financial products and they still don't really know what they're getting into.
Yeah, I think that's exactly right. It's the right product for some people used in the right way, and it can be the wrong product when it's offered to people who may be financially vulnerable, people who maybe don't understand it, or people who are in financial difficulty. Neil, what do you think this is going to do in terms of, you mentioned, the importance of sort of regulated providers and so on. Do you think this is going to end up sort of improving standards in the industry as a whole?
Yeah, I have a lot of views. One, yes, it will absolutely improve standards because it's important to make sure people can afford credit. But I think it's also going to cause a lot of change and upheaval. So if the playbook remains the same as we've seen in the past. So the regulator comes in, they regulate an industry, they essentially change the rules. And what's happened, for good reasons with regards to the payday lenders and guarantor lenders, the rules changed, and that opened up the back door for loads of claims companies to go after the lenders to get the money back. So I think we're going to see a lot of the maybe lesser good, well-behaved buy now, pay later companies are going to be in trouble because you're going to have these guys going, he should never have given you a loan. We'll get a claim against this person. So you might see loads of people end up going bust. I think you'll see a lot of consolidation in the industry. Some of the bigger BNPL providers have been very vocal about, we're already self-regulating ourselves and all of that. But that's not the same as real regulation. So, you're going to have these claims companies swarming around. And I think that's going to be a catalyst for some type of change. But, I'm not anti buy now, pay later. And the same reason that the regulator has eliminated access to payday loans, access to guarantor. That's sort of why Credit Spring exists, to help people get short-term credit. Buy now, pay later has been the main filler of that gap. They've come in. Otherwise, people would have had to go somewhere else to get that credit.
I think the point you're making about claims is very, very interesting because, of course, the UK and other countries, the UK sort of seen a series of sort of mis-selling scandals that are then followed by sort of a whole series of claims. I mean, for listeners outside the UK, in the UK, you're constantly bombarded by claims companies saying, have you done this? Have you done this? Did you buy a car? Did you do this? Did you do that? Because we can do a claim for you. Interesting. Okay, well, let's hope that leads to, as I'm sure it will, to more appropriate use of a good product that has sometimes been misused. Our next story is about Stripe. Stripe has acquired startup Orum for a disappointingly undisclosed amount. So we don't quite know how much Stripe has paid, but I'm sure the founders have done very well, or they wouldn't have, and the backers have done well, or they wouldn't have sold. So Stripe has acquired Orum, which is a payments orchestration startup, with the deal announced on July the 18th. It was founded in 2019 by Stephanie Kirkpatrick, and Orum provides a unified API, application programming interface, that supports real-time payout rails and uses AI to pre-authorize transactions and predict fund availability. The acquisition amplifies Stripe's push into real-time payment infrastructure. It complements recent moves like acquiring stablecoin platform Bridge and data API provider Privy. Now integrated with Stripe, the technology promises faster and more predictable payouts for businesses and individuals alike. So to hear a bit more about what Orum does, here's what founder Stephanie Kirkpatrick told us when she came on episode 793 of the news show in 2023.
Hi, everybody. I'm the founder and CEO of Orum. Orum provides the simplest API for fast, reliable payments. We're obsessed with solving the time to money problem in the US. And I think it's just a shocking statistic that more than half of Americans can't pay an unexpected $1,000 bill, and most adults have very little in savings. And so the concept in the US of instant access to money is a total myth. And right now, consumers and businesses aren't really thinking about how their money moves from point A to point B. They just realize that they need it faster and instantly. And that's the job to be done for Orum. So we work on the back end to make that experience seamless. And our single unified API unlocks access to all the different payment rails here in the US, including, and I think importantly, the newest ones, RTP, ACH, same-day ACH, wires, and now FedNow.
So, Clarelle, I think I'm tempted to sort of throw this question to you first. I mean, Stripe is obviously an awesome company that's achieved a huge amount over the past few years. But it's interesting that here Stripe is acquiring sort of an American payment orchestrator because, Stephanie was saying in that clip, it can be tough for Americans to make payments, and real-time payments are actually quite complicated in the States in a way that's sort of baffling to Europeans in very different systems. What do you think of this acquisition by Stripe? We don't know how much it was for, but do you think this is an interesting move?
I do, and hard to not get excited often when Stripe moves on something. But the particular thing that I'm interested in is what you said earlier, which is I think there really is still a pretty egregious divide between even parts of the world in terms of when do you get reliably an instant payment into your consumer or bank account. And I think the U.S. in some ways is plagued by that for a number of reasons. There's still, I think the stat is over 50% of business transactions still happen by check. Some strange things like that. But what's happened here is you've now got something that's, the two reasons this is interesting to me is one, it gets that instant experience closer to the consumer and the business. But second, it also positions Stripe in a way that they are getting advantages from infrastructure, like you said, because this orchestration that they're doing is bringing together a number of ways payment rails and a number of rails for you to be able to push out payments instantly. And so with that, you're going to have in a sense, a more valuable way to do this because you can do it across multiple rails. And it somewhat disrupts the fact that you have to rely on your card for all of these experiences. Right. And that negates, I would say there's a pretty big credit card culture in some parts of the world and not so much in others. And this just democratizes that and kind of puts things in a more defensive mode to do with that category or mode of transacting, which is interesting.
Yeah, definitely. James, I'd love to bring you in on the sort of the acquisition and then the increasingly acquisitive nature of Stripe, because there was a time when a lot of fintechs were sort of collaborating with each other and partnering with each other, like you're doing with Monzo, and yet actually we're starting to see these sort of the big fintechs really starting to sort of hoover up quite a lot of the smaller fintechs and sort of really start to become not conglomerates, but they're buying capabilities. So rather than partnering, they're buying. Do you think that's a valid shift that I'm seeing, that we're seeing sort of some of the sort of smaller fintechs just getting acquired by the bigger fintechs? The bigger fintechs are sort of gradually sort of consolidating the market. Do you think that's a fair observation?
Yeah, I think in Stripe's case, it definitely is. And I think it's super interesting if you look at their acquisition strategy. It seems less about capturing market share with their existing product, but more how do they broaden their product to ensure that they've got kind of competitive edge across all segments. So whether that's the kind of on-off ramp with Bridge or like instant payments with Orum, like I think the fact that they're doing that to enhance their product is an interesting view on it, rather than just trying to, I guess, be more dominant in the space.
I think that's right, isn't it? Stripe's always looking for what else can we do for our existing customers? How do we make our existing products better? Or what new products or new capabilities can we add? Yeah, I think that's great. Neil, what did you think of this? Do you think this is exciting?
I think it's exciting, but as an American who lives in the UK, I'm absolutely baffled at the way money moves in the US. So my first thought was, is this really a thing? Because as you know, we move money all over here. But as Clara was saying, we had to pay some people in the US and they only take checks. And we were like, can we not give you a bank? And they just don't get it. So, Stripe's obviously taking over the world. I think they're doing the sort of, they're going to get so big that maybe the regulator is going to go, is there some anti-competition? But they're absolutely seeing the future. But I was talking to someone about this today, and it just seems like there's a huge opportunity in the US. Like we all enjoy the pleasure of moving money seamlessly over here. And it's just crazy that you can't do that in the US still.
And I guess that's part of what Orum has been trying to do, is trying to help, as you're saying, build those rails to make it easier to move money. And of course, sometimes you think, does it really matter if the money doesn't move real time? But actually, when it comes to getting paid 2-3 days later and banks sitting on your money, that can make an enormous difference.
Well, absolutely. And what the founder on the recording said, half of the country can't pay for £1,000 expense. It's similar in the UK. And that's, again, like Credit Spring exists to solve that problem. We're really proud. We actually use Revolut, but we do instant dispersal. So when someone tries to borrow, once someone logs into their account, borrows, the money's in their account before they even have time to check it. And we think that's like one of the sort of magic moments that they love, because no one's used to that sort of speed. But it's so important. When people need money, they need it now, not in a few days.
Clarelle, this must be familiar with Pipe, because of course small businesses, particularly businesses that serve other businesses, their biggest challenge in life is late payments from their customers. So you must see and hear this a lot from your customers, of just that flow of payments.
Undoubtedly, and it's exactly as Neil's described. And then on the when you think about the business segment, even more in terms of the cycle they go through on an ongoing basis, whether it be they're doing physical goods or they have a services business, there are things that they're trying to inject into their business to create revenue. And there's a lag on which that revenue actually becomes real. So if you put a product on Amazon, you have to advertise it, you have to ship it somewhere. And even that alone, the touch points in there of how money comes in and out of your business, you need to close those gaps so that you're able to actually spend on the advertising and spend on the supplies. And so it's multiple points of pain, to be honest, if you want to put it. That amplifies is my point, which is part of the reason why what we're doing actually right now, and part of my journey in the next 18 months, is to actually try to turn that into a data science problem, which is, can I figure out the operations of that business and match it to the sales and try to figure out, you're going to run out. You're going to run out. So I'm going to help you here. and I'm going to close that gap for you. I can see your payroll comes in on the 27th and your purchase order is typically coming on the 2nd. I'll give you $4,000. It's not even an application. It's there for you.
That's very powerful, and that's definitely coming. I think there's a race on to see who can deliver that most effectively to small businesses. And I guess Stripe may be in that race. Let's see. But yeah, Stripe is certainly becoming a very dominant player. Okay, now for a quick look at one more newsworthy story this week that we don't have time to cover in full, but we think you'll find just as interesting, which is that Sam Altman fears an AI-enabled fraud crisis. Speaking at a Federal Reserve conference in Washington, D.C. on July 22nd, OpenAI CEO Sam Altman expressed urgent concern over the rising risk of AI-powered fraud. Altman criticized financial institutions that are still using voice prints to verify identity for large transactions, describing it as crazy because AI can easily defeat such systems. He warned of a significant impending fraud crisis, noting that generative AI can create near-perfect voice and video deepfakes that can bypass existing security measures. He urges the financial industry to abandon outdated authentication methods, invest in new verification systems, such as proof-of-human technologies, and collaborate, especially across institutions and the Federal Reserve, to strengthen defenses. And I think he's absolutely right. It's frightening how quickly AI systems have been able to impersonate people, impersonate their voices, impersonate them on video. And that does invalidate a whole load of security measures that the financial services industry and other industries have implemented over the past decade to try and authenticate humans. And so the entire industry does need to rethink, how can we authenticate people in new and different ways that artificial intelligence can't fool? Okay, let's move on to our final story. So young people are calling for change, as young people tend to do. 84% of kids and teens in the UK want to see financial education on the new national curriculum. So this comes from a survey by Go Henry of British children, which found that 84% of them wanted more financial education in schools, which was equal to or surpassing the importance of maths, English and science. Not sure what that says. And 68% of 18-year-olds fear leaving school without money skills. Research by Go Henry highlighted that early financial education pays off with long-term dividends. Children who receive more education earn more as adults, start more businesses, have lower unemployment, and contribute more, projected to be adding around another £200 billion to the British economy by 2050. Sounds like a lot of money, but I suppose that's over a long amount of time. James, let's come to you first. I'm slightly surprised by them saying children saying they want more of it. I'm not perhaps so surprised that they say it's more interesting than maths. What do you think of this?
Yeah, I think it's really interesting. Go Henry are actually a customer of ours. We power their junior ISA proposition, which is kind of a children's investment account. So yeah, I'm always super interested on their take. But I think particularly on financial education, it's something that I'm super passionate about. In the UK, you get taught about all sorts of things, whether it's kind of sexual education or relationships or mental health, but financial education is just completely missing from the curriculum. And I think it's super damaging to children. I mean, the number of people who have no understanding of a mortgage or interest or a credit card, and how these things actually work is I guess, I think, super concerning. And I think it leads to really bad customer outcomes. It's not hard to imagine that you've got credit card companies that typically target young people as they turn 18, targeting them with credit cards. They run up loads of debt, and that's through a complete lack of understanding. And so I think as an industry and a society, we've got to try and do better here. And I think financial education is a great place to start.
I love it. What do you think, Neil?
I agree 100%, but we're very much in the space. We're trying to promote financial education. We recently launched something called the Learning Academy and have like 50,000 people on it. But It's hard, right? If we're honest, financial education is not super exciting. So I'm surprised that 84% of the kids said that, but I do think they said they'd rather do that than math, right? But for the way we approach it, it's sort of about like bite-sized tips and sort of common sense and logic, heuristics, I guess, instead of saying read this long blog about how you're supposed to save. Everyone knows they should save. But like what James says, we see the what goes wrong when you don't have financial education. And in this country, there's this sort of cycle of you have a student overdraft, it's free. The second you leave school, it starts being expensive. You're trapped. Then you have the first credit card you don't know. And all the lenders are doing all the tricks to basically extract money from you. And I'd put the BNPL folks in this category too. So it's very easy to take advantage of someone, let's say, right? And I think without that education, that's how we can play defense against that. But I think people need to just know the basic tips, right? Interest rates are always going to be hard, right? Everyone knows they always need to save, but how can I save, right? Or what should I be looking for when I try to take out a loan? The way we solve that at Credit Spring is we remove the interest rate and we just charge a fixed fee, so people sort of understand that. It's a multi-pronged thing. I think the government needs to lead the charge here. It absolutely should be in school. But with my kids, so like my 7-year-old, she's always wanting to make loom bands and sell them outside. And I'm like, that's good education. She's learning how much it costs, and then I get all nerdy about it and start talking about margins. But it's all, I think it's just about embedding it in the culture. It's about the family. But we need the government to support such a big sort of challenge. Like I said earlier, the last time I heard, the financial literacy age is age 11 in this country. So we're basically financially illiterate, but yet we depend on finance.
It's disappointing. Clarelle, you told us your children aren't school age yet, but do you want to see them being taught about finance in school, or are you going to be doing that yourself?
Undoubtedly. So I do have young kids, but frankly, I'm a great aunt. My sister's a lot older than me, so I've had 3 children around me, and they're now in their 30s, if you can believe it. And I don't know if you know, again, I'll quote this book again, but this is called Bank of Dad, if you've heard of this book before, The Dad Bank. And it inspired me with 2 things with my niece. One is to give her allowance in a way that she would get interest on it. And 2, allow her to spend it however she wanted so she could feel how much pain it is when you make the wrong choice. And I say that to you anecdotally because it's one of the most charming ways I've realized that part of the unlock here, in my opinion, is getting out of this kind of myth that you need to give your kids a bank account and that's how they'll figure it out. Or you need to give them, not interest, just give them the money. Give them the ways to figure out how to calculate it and make the mistake, right? And you need to start, you can do that very, very early. In fact, I could probably do it, at 4 or 5 for my kids, and they would know the concept. So I think what Go Henry's up to, and probably James, what you're beginning to see now as well, is that you can get in at a much earlier stage in these kinds of lessons and kind of practically let them have that mindset of, I'm going to test and try, which is just such a healthy one. And gamify it a bit, I'm actually just also so curious why they're self-volunteering for this education. It might be that you just see there's so much to be had in the world. I don't know, but it's a good sign.
Nice. Well, that's a great way to wrap up today's FinTech Insider News. So thank you so much to the 3 of you. You've been absolutely brilliant. I've really, really enjoyed today's conversation. Where can people who are listening find out a bit more about you and your companies? Clarelle, where can people find out a little bit more about you and a little bit more about Pipe?
Certainly. So you can definitely reach me directly and certainly on our website, and I'm very available on LinkedIn all the time.
James, where can people find out a bit more about you and about Seccl?
Yeah, I'm on LinkedIn too, so feel free to get me there. We're also running a bit of a webinar talking about our H1 to date. So if you pop over to Seccl's LinkedIn page, you can find more details and sign up there.
And Neil, where can people find out more about you and about Credit Spring?
Well, just Google Credit Spring. And also, if you could spell my last name, you could Google that because there's not very many of us. But I'm also on LinkedIn.
Fantastic. And as for me, Benjamin Ensor, you can find me on LinkedIn or you can find out what the team have been up to at 11fs.com. So thank you all so much for listening to today's FinTech Insider. Please do follow us on your favorite platform, and please do recommend us to a colleague or a friend. If you want to join the conversation, seek us out on social media. Just search for 11FS or FinTech Insider, or you can email us at podcasts@11fs.com. So thank you all so much, and goodbye.
In today's fast-changing digital world, proving your company is trustworthy isn't just important for growth, it's essential. And that's why Vanta is here. Vanta helps companies of all sizes get compliant fast and stay that way with industry-leading AI, automation, and continuous monitoring. So whether you're a startup tackling your first SOC 2 or ISO 27001, or an enterprise manager vendor risk, Vanta's trust management platform makes it quicker, easier, and more scalable. Vanta also helps you complete security questionnaires up to 5 times faster, so you can win bigger deals sooner. The results? According to a recent IDC study, Vanta customers slash over $500,000 a year in costs and are 3 times more productive. Establishing trust isn't optional. Vanta makes it automatic. Visit vanta.com/insider to sign up for a free demo today. That's VANTA.com/insider.